Hi, one today we're going to talk about is Altria Stock A Buy and if it's a good opportunity to go buy into this company. Now, if you guys don't know and it's like your first time checking my videos out, I am actually a buyer into Altria Stock. I've been kind of buying this stock every time it goes under about $40, and when it goes under that sort of point, I feel like I've got a good appreciation on the share price and a good dividend. But I'm going to try to take a neutral view from the company right now and talk about some of the positives, and obviously those are the reasons why I got into the company, but also I'm going to give a fair shout to some of the negatives in here, because there's a few negatives playing on this company, and that's kind of why we've got the discount in the share price right now. And with that discount, weigh up the positives, weigh up the negatives. Is it a good opportunity to go buy this company? So the ticker for this one is MO, and the stock is currently trading at about $39 as of recording this video. Like I say, it might have changed by the time it goes up, but yeah, it's at $39 as of recording this video. Now, actually, when we take a long-term stock chart, since it's IPO'd really on the stock market, it's actually a company that was just doing really well in stock price. You can see that it just kind of carried on going up. Even with the declining cigarette sales that we'll talk about in a little bit, this was a company that had really good gains on the stock market chart. I think people were just happy to kind of, collect that dividend. But then since about June 2017, the stock has gone down 50%, and even year to date we are down 19%. So it has been a rough ride since 2017, and since year to date as well, it's not had a great year, because at one point it was trading at about $50. And there's currently no PE on this stock, which we'll talk about in a little bit. It also has a dividend yield of 8.4%, which is one of the main things of why you're getting into this stock, is because of the dividend. Now, I do believe there could be some gains on the share price as well, because I do believe this is quite a low share price. But from a dividend point of view, obviously 8.4% is a big standout dividend yield. That dividend alone is pretty much the same or a little bit more than what the S&P returns on average in a year, so that definitely stands out as a very high dividend. But obviously you've got to be careful not to get in just for that dividend yield. You've got to kind of make sure that it's not a dividend trap. You've got to see if that dividend is a safe dividend going forward. So first of all, the main thing Altria was kind of known for was like the cigarette brands, the Marlboro brands. It was kind of in that industry, and obviously we know what's happened with cigarette sales, and I think it's come more publicised, the health risks with smoking. At the same time, if you are a smoker, it's kind of an essential thing that you do, and they kind of see it as being necessary. It's a bit of an addiction really, isn't it? So people that do smoke tend to carry on smoking as they are addicted to it, but the amount of smokers is coming less and less. Now, the good thing with this is, smoking has been on the decline for so many years because of the health risks, getting publicised so much. But the great thing is, the amount of the price that it costs for a packet of cigs is, it just carries on going up. So it kind of plays against the kind of decrease in numbers. But as well as that, Altria has been a little bit more diverse in its revenue income stream and moving to new industries, which has been really good to kind of combat that decrease in smoking. But at the same time, I think that smoking, it will carry on slowly declining. I think that the predicted figures is that 2020 there's going to be a decline of about 4 to 6% in sales once again in cigarettes, or less smokers. So it is a declining area, but at the same time, if the prices just carry on going up, it will kind of play against the decline in sales. And I think that smoking, for me, I don't ever see smoking kind of like completely getting written out. I think people will still smoke. And the people who do smoke will see that as an essential. But because of this, Altria has looking into other incomes that can kind of counteract that decline, and we'll also be covering them. So on Simply Wall Street, the stock is currently 60% undervalued. Now, I would have to say that I don't think it's 60% undervalued. Like, Simply Wall Street is a good little website to kind of get some estimates of where the company should be, but I think 60% undervalued is a little bit too much, and I'm a shareholder, so I would say this company is probably at least 30% undervalued, maybe 40%, but for me 60% is a little bit too much. But yeah, I would definitely agree the share price is undervalued, and we could potentially get some gains off that share price, maybe a 30% gain as well as collecting that dividend. Now, the forecast is okay. We can see that since 2018, the amount of profit and the sales has declined. We'll touch on that. Obviously, that's due to a few things with investments, with Juul. But going forward, we should see this company start to go back to where it was, pre-2017, 2018, where it's posting good profit growth and good revenue growth. That's what we want to see from this company. So the forecast is looking pretty good. It's just been a bit of a rough 2 years with Altria stock right now. Now, when we look at the balance sheet, yeah, the balance sheet isn't the best, and I would say normally a company that does have this balance sheet is a company I probably would not invest in. It's got 30 billion in debt, it's got 5.6 billion in cash, but to be fair, that cash pile isn't too bad. 5.6 billion cash, that's enough to kind of go through a lot of storms that may come to it. And with it being an essential product in terms of recessions, it's a thing that will always be needed with recessions. So it's a kind of a bit of a recession-proof company, really. So it's never a company that needs to have an amazing balance sheet, as well as that, because of the health risks associated with smoking and the products that they're in. Altria is a company that is going to get fined quite a bit, and if you're a company that has a lot of cash on your balance sheet, what's going to happen is you're going to get massive fines. And Altria go from the point of view of, let's return a lot of this cash to investors, and that's how they end up pumping up that dividend all the time. The priority is to pump that dividend up, get the cash paid out to shareholders rather than hold it. And then if fines come across, we can play the innocent guy of, look, we haven't got that much money, only fine us a little bit, and the fines are only in the region of millions rather than billions. That's why Facebook always get fined so heavy, because they look at Facebook and go, look, we know you've got 60 billion in cash, you can afford a 5 billion fine easy. You give a 5 billion fine to Altria stock that is kind of the same sort of thing. Facebook sensitive data, Altria's health, could potentially be really damaging people's health in the long term, and quite a lot of people's health. And I would say that's just as bad as maybe even worse than losing people's data. And that is bad, but damaging someone's health is something that you can't ever recover from. It's something that's with you for the rest of your life. So yeah, you would say that the fines could be just as bad as Facebook, but if they play the innocent guy, then obviously they don't get that many fines as well. Now, there is no insiders buying this company, which I would like to see a few more insiders buying with it being on this sort of discount, but obviously there is a few things in the background that we'll touch on. And the dividend payout rate is a little bit over what they are currently paying out, but at the same time, this dividend has a really strong history. It's been increased the last 11 years, and if it wasn't for what's going on right now, the dividend payout ratio would be about 80%. And going forward, if it can carry on increasing that profit, increasing that revenue, that payout rate should stand around about 80%, which is totally fine for this company. Normally I'm a guy that says 60% is what they should be aiming at, but 80% for this one, because of how they like to manage that dividend and not keep that many cash on. I'm quite happy with it to be around about the 80% on this one. Now, with the income streams, obviously we touched on cigarettes and Marlboro brand just before we got onto Simple Wall Street, but now that they're trying to diverse where they're trying to get this profit from, the forecast and the revenue increase, one of the investments is Juul, and this is kind of the one that's kind of really affected the share price over the last few years, and what's kind of stopping the stock from going up in share price, from my kind of opinion. So we started off with Altria actually buying 35% stake in Juul, and I've got to say Altria did not play this one quite well. They kind of said, oh, you know what, we're going to get rid of all our e-cigarettes at the time. They weren't doing really well. Juul was dominating the market, and they kind of said, you know what, we're going to leave the e-cigarette industry because we don't want teens smoking. It's a really bad thing. We don't want them vaping, should I say. We're going to leave this market. And everyone's like, all right, that kind of makes sense. You don't want your reputation being damaged. Anyway, 2 weeks later, it turns out that they bought a 35% stake in Juul, and Juul weren't going to accept the investment unless Altria got rid of one of the competitions, which was their own brand, and then they would allow the investment to come in and they take a 35% stake. So everyone kind of turned around and went, hold on, you just said you were doing it because you didn't want teens smoking, and then you just go get a 35% in Juul stake, which obviously caused a rift straight away. Now, since then, there's been a lot of pressure on the health risks and flavours and banning certain flavours. Now, none of that is actually being proven just yet. There's been a lot of different news articles that have come out saying it does cause this damage, but nothing's been concrete proven with the flavour side of it, but it has led to a few flavours actually being banned. Now, that kind of lawsuit has kind of died down a little bit now, and where it comes from now is that apparently Juul have been targeting their advertising to teens, and teens are now vaping, and obviously you can't really be marketing your product to people that shouldn't be vaping. it should be going, for adults. And that's where a lot of the lawsuits happen now, and there's definitely a lot of lawsuits building up on the marketing side of Juul and making sure that the marketing is appropriate and not going for people that obviously are teenagers. So there's a lot of pressure on there, and that's what's burning into a lot of the EPS side of it, the profit, the revenue side of it. And that's where a lot of the pressure's gone on to the stock of Altria right now. So it looks like this could be around for about another year until a lot of these lawsuits are kind of played out. From my kind of view, I think Altria should be alright and they should get through this kind of storm right now, and then eventually, hopefully in 2021, we'll kind of see a lot of this pressure with a lot of the money having to go to this, all these kind of lawsuits that are going on. We should kind of see that pressure clear off in 2021, and then that should lead to some profits and revenue gain going forward. Now, it also has an investment into the Kronos Group, which is 45% stake, which is quite a big stake to be fair, and Kronos are kind of a play in the MJ sector. And with MJ kind of being legalised in a lot of states now, there's kind of a lot of potential there, especially for kind of like the younger generation that want to. I think, in my opinion, I think MJ is probably growing quite a bit compared to, traditional cigarettes. I'd say the same with Juul. I'd say that kind of is a bigger industry now for Altria than the cigarette area. Same with Kronos and the MJ play. I think it's a big sector for them, probably bigger than the smoking sector that they're currently in. I think a lot more people are starting to smoke, and if it's legalised, obviously it'd be a lot more easy for Kronos Group to go in and sell MJ in them kind of states. Now, there's a lot more states that need to get legalised, so that will lead to more growth. And also worldwide, the MJ is kind of a thing that will take a while to get legalised in a lot of areas. I think, it could take up to 10, 15 years. In Europe, we're very slow people. Like, everything to get approved in Europe is like 10 years behind the States. Building permissions, anything. If you want to build something and get all permissions through the EU, it takes donkey's years. In the States, in China, literally, they can get it through in like a month. It takes us like over 3 years of arguing if it should go ahead or not in the EU. And in the UK, just look at HMS2. I mean, that's like still arguing over the last 5 years if we should build it or not. Yeah, it's going to take a while for a lot of these legalisations in a lot of countries to get through, but I think it will eventually happen, and it'll be quite a big new industry that opens up, and obviously the Kronos Group are going to be a big player in there, and it's another diverse investment from Altria. And I'd say the last major one is Budweiser. There's a couple of other investments in there, like nicotine patches, other alcohol products that they have, but the next big investment is kind of buying a big investment into Budweiser. Obviously, Budweiser is a massive brand worldwide. It's the company that has the biggest market share in the beer industry. I have to say it is kind of shrinking a little bit. Nothing huge, but I think like last year it shrunk about 1%. But still, it owns a big chunk of the beer industry. I think it's the 27% it owns in that industry. And Budweiser is a massive brand, and Altria bought a 10% stake into them. And I think that should carry on working out for them, because I see beer sales still being pretty good. I think there's always going to be a need for beer, and sure that trends change from wine to gin or what have you, but Budweiser is a big brand that's always going to be out there, and I think they should be okay. So they did buy another 10% stake in there just to diverse that revenue a little bit more as well. So overall, I really like this company because I think the share price should go. I think it's undervalued at these sort of prices. I think it should be probably about a $50 stock, to be fair. And as well as that share price, it's got a dividend, and it's a dividend they're committed to try and keep and try and increase. And I think Altria as well has kind of gone to a point where it's kind of diverse in that revenue. I think eventually Juul will be a good investment when everything kind of sorts out with a lot of these lawsuits that goes on. I think Kronos Group is a good investment for 5 to 10 years down the line. I think Budweiser is just a nice little thing to keep them ticking over for going forward from now. So I think from this company's point of view, it's starting to build up its safety over the next 5 to 10 years with the decline in cigarettes. And this is why I like this company over a lot of other cigarette companies, because I've had a few people say like, why don't you buy this one, why don't you buy this one? But for me, when I look at Altria, you kind of get a better share price gain on a lot of them. You're getting a higher dividend yield than a lot of them. I think the future in this one's a lot brighter because of them having like the leading e-cig brand, which is Juul. They're also kind of getting in that MJ space, which is kind of 5 to 10 years from now, which will really pay off. That a lot of the other cigarette industries or brands aren't really doing that one. We've always put together, I think Altria is a really good investment on the share price and dividend front, and the diverse income stream that is starting to build up. So I like this one. It's a company that I kind of just add into below $40 and kind of get that 8-9% dividend yield whenever it's there. Under $40, I do really like this one. If it does go above $40, then I'm a little bit, I stand off it a little bit. But when it does drop under, you know, a $40 range, I just can't resist an 8.59% dividend yield. I think it's a pretty good one that I think this should be able to carry on paying going forward. It's got 11-year history of paying the dividend yield as well, so it's got a good history on it as well. You know, it's always been focused on delivering that dividend, so I do like Altria stock. I do really like it, and that's why I do own it. So in my opinion, it is a buy. There is a couple of little risks here with, you know, the lawsuits in the background, but I think it will work its way through it, and I'll just carry on picking that dividend, and I think I'll also get a little bit of a share price increase on this stock as well. So that's me covering Altria stock today, guys. I hope you really enjoyed the video, and if you could like it, that'd be absolutely amazing if it helped you out. If you haven't, subscribe, that'd be absolutely amazing as well, and I'll see you in the next video.